I was 32 years old, and I had a very large windfall for my age. So I was very fortunate. And I went from being the CEO of a publicly traded firm and didn't take my responsibilities seriously to become a good steward of my financial capital. I was cold called from a broker who saw that I sold. Over many, many years, 12, 13 years, he kind of bought this and sold that, and I really didn't pay much attention. Somebody did ask me somewhere along the line in my process, have you ever benchmarked your returns? I said, well, what's that about? No, I don't really know how to do that. And it was the internet where you could literally go on and draw the chart of the growth of the S&P 500, and then you can look at your portfolio. And I started looking at these gaps and I'm going, what the heck? So had he invested in a portfolio of index funds over this 12 or 13 years, I would have ended up with $30 million more dollars. So I go to Barnes & Noble's and I come out of there with 22 books and I take them home and I start plowing through them. There were many of the early books written about indexing, and there were some other books in there about actively managing your portfolio as well. One of the things that caught my attention early on was the fact that all the passive investing had this academic evidence associated with it. There were academics telling you this, and in fact, they were Nobel Prize winners. And I'm going, wait a minute, that carries so much more weight than something I read in Fortune magazine or the Wall Street Journal to have a peer-reviewed academic paper. The more I read, the more and more confident I became in this. So first moved my own money, and then I got the idea of starting my own firm.
I first started working with Mark as a financial writer, and the early days were very interesting and exciting. There really wasn't any influence that we drew from other financial service providers or experience from working with them. That's what made IFA so beautiful straight from the beginning, is it was different. And I think Mark always intended for IFA to be different from other service providers, because in a way I think he felt that most service providers had failed their clients, and he didn't want to look or feel like that. So Mark used to walk around singing this song, I'm different, and everybody knows it. And he wore that like a badge of honor.
That book, probably more than anything I've ever read before or since, was a book that changed my life. I did read the book in one sitting in one night, and I think the reason that I did that was because it articulated pretty much every frustration I'd ever had as an advisor trying to find the best solutions for my clients. I tried everything, and everything ultimately sort of let me down, let my clients down. I think that was the first time I really became aware that there was a different way to think about investing.
When Lehman Brothers shut down, that was pretty spooky. But we didn't see it as the idea that we would lose clients. We saw it more as we need to really help these people understand and overcome their fears. And you hear that phrase all the time, it's different this time. So the message that we really tried to deliver at that time was that as long as markets are open and willing buyers and willing sellers can come to the market and agree upon the best estimate of a fair price, it's never different. Admittedly, it went on a very long time, and it started to feel a little wearing, and it got kind of tiresome. But we stayed the course, and our clients appreciated all of the information we provided them. That served our clients very well. And we had a very, very good retention rate through that time period.
Mark Hebner has been very good about making decisions based on data, long-term data that goes back 100 years in some cases. And especially with institutional investors, that just seems to be missing. And the question is, why would you not make your decisions based on data? And what's interesting is even managers that outperform, even for a decent amount of time, it can be 5-10 years, when you look at using their tracking error, whether their performance is statistically significant to prove that it's not luck, most of them don't pass that test. Picking active managers really is a game of chance for the most part. And the types of charts and the statistical significance analysis that Mark does reveals that.
It's what I call the language of risk, the risk-ease. You have to speak this language to fully understand it. And just like legalese, if you don't know all the legal language, you probably shouldn't be representing yourself in court. Well, if you don't speak risk-ease, you shouldn't be representing yourself in the public markets. I think that's probably the number one problem for people as investors, is they just want to rely on their gut, and instead of at least a reasonable knowledge of statistics.
I don't think Mark's contribution to investor education can be understated. And he hit this fast and hard and intensely from the very beginning, and he has not slowed down. I have never seen a website like IFA.com. The exhaustive resources that he has provided and the energy that he puts into providing that data and research and education to anyone with a computer and an internet connection is really staggering.
My little motto is, I'm here to change the way the world invests. And as crazy as that might sound, the World Wide Web provides you that opportunity. So that's why I started creating video and putting my book online and just creating massive amounts of content. I think we might be the largest content provider in the financial services industry. And by doing so, I'm educating the public so they can improve the way they invest their money. And that's something I'm really proud of.
When I think about what success really is, it's the success of clients, not of a business. And it's very important for us, each of us, to know that our clients are having a successful experience with their investments and that we're doing everything we can to facilitate that. And so when I think about IFA as a big success, I think IFA is a big success because we have more than 2,000 clients today who have benefited so much from the advice that we have delivered. People are still the primary reason why we do what we do. And their needs will never change. Their wants and their hopes for their families and their financial futures will never change. And so as long as we keep our eyes fixed on doing right by our clients, I believe that that is the future of financial advice.
Mark has achieved a lot over the past 25 years with IFA, and he's going to have a phenomenal legacy. I wrote a book on the financial history of the United States, and one of the people that stood out the most was a woman named Hetty Green. She's completely mischaracterized, was an incredible investor, and also had a lot of integrity during the Gilded Age, which was not a time where integrity was generally rewarded. And she had a famous quote where she said, "When you're honest nowadays, people accuse you of being mad." That, to me, defined her legacy, and I think that will define Mark's legacy, in that we are in an industry that's very prone to misleading clients that reality is different than it actually is. And I think Mark's legacy will be, he is one of the people that did not do that.